Good night to everyone. I hope you can hear as well. While the panelists are going to take a seat, I would like to thank you all for your presence tonight. Thanks to the CFA for inviting me and this senior panel member to have such a great experience with you and interact in this discussion. Basically, the discussion for tonight is the outlook of the world economy and its impact on investment decisions. The panel is going to last 50 minutes in total, and actually they stole from me 10 minutes that I'm going to go to recover if you deem appropriate. So we're going to have 40 minutes of discussion between the panel and myself around a few topics we have defined together. And then we're going to open the floor for a 10-minute Q&A with you so that we can hear about your opinions and questions. I would like we spend some quality time together, so I would really ask for some silence in the room for the respect of the speakers and also for the respect of the people who are hearing our speakers today. We're going to go, first of all, through the presentations of the speakers. After, we're going to go through the panel content, finally with some conclusions, okay? So I am very honored with the panel today. We have 4 brilliant speakers, and I would like very briefly to describe to you their background. First of all, we have His Excellency Karel Diba, Ambassador and Permanent Representative of the Czech Republic to the OECD. Karel Diba has an impressive trajectory of many years, and actually he holds a doctorate degree in economics of the University of Economics in Prague, and he has been a professor of economics for many years. Mr. Diba was teaching at the University of Economics. He was appointed also research and senior researcher at the Institute of Economics of the Czechoslovak Academy of Sciences. He has been project manager at the same Institute for Forecasting of the Czechoslovak Academy of Sciences. In 1990, Mr. Diba was appointed Minister of Economic Policy and Development and also director of the Institute of Economics of the Czechoslovak Academy of Science. He was also elected president of the Czech Economic Association, and also he has served as Minister of Economy in the government of the Prime Minister Václav Klaus, sorry for my pronunciation, and also elected a member of the Parliament of the Czech Republic, Civic Democratic Party, sorry. Has been also a private consultant in many companies. Thanks, Mr. Diba, for joining us tonight. Louis Boulanger. Marek actually introduced very well Louis before, but just as a reminder, because some of us were a little bit busy eating the main course at the time, Mr. Boulanger is the founder of LB Now. He was previously executive director of Mercer Investment Consulting, where he was responsible of the strategic asset allocation advice given to institutional clients. His private practice today provides investment advice to both private and institutional clients and client specialist investment performance services. He has also served as founding president of the CFA Society of New Zealand and remains on director. He holds a Bachelor in Science from Laval University in Quebec, and he is an actuary today. Now, thanks, Mr. Boulanger, again, for joining us tonight. Our third speaker tonight is Michal Mares, MBA, CFA. He's also a founder of a company called NB Financial Advisors, which is an independent financial and corporate finance advisory firm. Previously, Michal was director in the Financial Advisory Service Department of PricewaterhouseCoopers in Prague, heading the Corporate Value Consulting Group and also a subgroup of the M&A Financial Institute Specialists. He has been involved in numerous advisory projects, including business valuation assignments, acquisitions, disposal, and privatizations. Michal ran M&A projects and valuations in the banking sector, investment management area, utility sectors, etc. Michal has been involved in many critical projects like the privatization of one of the largest banks in Lithuania and disposal of financial institutions in the Czech Republic and Croatia. He has also been involved in other valuation assignments for international players operating in the Czech Republic. Finally, Michael is a CFA charter holder, and he holds an MBA from Rochester Institute of Technology. Thanks, Michael, for joining us tonight. Juan Ignacio Crespo, actually now media manager for continental Europe as well as analyst at Thomson Reuters. Juan Ignacio was appointed CEO at 4 different mutual fund managers companies and 2 broker-dealers in Spain and Luxembourg. He has been also general director at the financial holding companies of 2 Spanish main bank groups, Caja Madrid and Caja Duero. He was also general director at Telefónica Group. He has also held different positions in the Ministry of Economy and Finance in Spain, and he has basically negotiated with investment banks foreign currency denominated bond issues and syndicated credits. Has been also be member of many different bank institutions and boards, and actually speaker for many years in a very important conference of Instituto de Empresa, CFA, Santander Bank, and also publishes our articles on a regular basis on main financial papers. Thanks, Juan Ignacio, for being with us tonight. Now that we have finished the presentations, we're going to discuss a few topics, and actually, in a topic like an outlook, obviously there's a lot of opinions. There is no right or wrong answer. Everyone is going to have an opinion. And the more diverse the opinions are, the more funny is the panel, actually. So we're going to talk, first of all, around the general or macroeconomic evolution. And in that sense, I would like to ask a question to Mr. Diba and also Mr. Crespo around how do you think, Mr. Diba and Mr. Crespo, the economy would evolve in the next 2-3 years? And what is your opinion specifically on the inflation fears we are hearing and we are experiencing in some countries today? Mr. Diba, do you want to start?
Thank you. Thank you for the introduction. Just want to remark at the beginning that I'm now international bureaucrat. So days of my own research seems to be a bit over. So I rely in what I say here on the research of the OECD. This will be my interpretation, so they would not necessarily agree with what I say. First, and very fast, I understand that I have 2 minutes. We have a strict moderator. And anyway, I'm used to follow the orders from earlier days. So there is, according to the experts of OECD, and I agree in this respect, there is not to be double dip. And the recovery we see in the developed markets is still fragile, very fragile, but there is recovery. It is, as I've said, not said yet, but say now, uneven across the regions. We have slow, fragile recovery in the developed markets, as I've said, and there is quite a robust recovery in some countries like China, India, Brazil, and so forth. Inside of the, of course, Eurozone, we have also different developments, and I don't think I have to pinpoint which countries seems to be losers and which one seems to be winners. I only would stress that Sweden seems to be economic miracle. The question is to what extent it is due to floating exchange rate or to slashing excesses of welfare state in recent years in Sweden. Inflationary pressures, OECD thinks, not in developed countries, of course visible in the emerging countries, China, Brazil, and so forth. I understand we may come back to it. Obviously, we may see, given there is confidence developing in the mature economies, we might see that the corporate sector will spend money because they have a lot of money in the coffers. Obviously, there are also risks to the development, and this is inside of the Eurozone, as we all know. Still unresolved questions regarding Greece, so on and so forth.
Thank you, Mr. Riva. Mr. Crespo?
Thanks, Alicia. First of all, I think it makes no much sense to talk about double dip of the US economy now, because almost 20 months have elapsed since the US economy entered its recession. So I think what there might be is another recession in coming years, but it will be a different recession. So I think for that new recession in the US economy, and maybe recession in the rest of the world, as usually happens when the US economy fails in its growth, I think they still have 1.5 years of healthy growth, and maybe by mid-2012, in the summer or autumn 2012, it will start the countdown for the next US recession. Until then, I think we will enjoy healthy growth overall in the world, with very few exceptions. Regarding inflation, I think the fears of inflation are very, very much exaggerated. If we talk about overall inflation, I may agree, because the rise in commodities prices is very evident, and the impact on prices will be felt. But if we think of core inflation, I think there is no risk at all. First of all, because in order to inflation being generated, we need that the spiral increase of prices, increase of salaries start to work. And it isn't happening. Why? Because all over the world, people prefer to keep their jobs instead of vindicating an increase of salaries. Second, for inflation to take place, we need one condition which is not present now: bank lending. The known process of money accumulation by the fractional reserve banking is not taking place, because banks are not lending at a high pace. So I don't think there is a real risk of core inflation going up. And finally, excess capacity is still very big in most countries. So core inflation, no. Overall inflation, maybe.
Thank you, Mr. Crespo. May I ask this side of the room, please, to keep the silence, because we're hearing a lot of noise in that table in particular. Thanks very much. We're going to go now. Now we have taken a look at the global economy situation. Let's take a closer look at the rest of the market situation, specific asset classes, and in particular the equity and fixed income arenas. So this question goes for Mr. Mares and Mr. Boulanger, which is, in your opinion, Mr. Mares, how long can last the upward trend of the equity markets? And in that sense, how do you foresee the equity versus the bond markets?
Thank you. It's a great opportunity at the forecasting dinner to look at the history of it. Don't worry, I won't go far back in this, because the oldest data I've collected come from 1945. But if you notice today announcement, the S&P 500 index got to the level twice history, there were declines in the index values, but they were shorter than the periods of increase in the value of the stock index. So S&P, for example, 500 rose around 6 to 7% on average throughout the period 1945 to 2010. Periods of decline were short but tough. Periods of increase were mild but long. Therefore, given that we are now 2 years into the recession and the first signs of recovery appeared in the course of 2010, I think we can easily expect that the stock market's indices will go up for a significant, let's say, 4 or 5 times in years period. And the other question about bonds, 2010 was a good year for all securities, equities, bonds in a sense, and some commodities like gold. Bonds in the final quarter of 2010 went down in prices, but their yields increased significantly. So those who bought bonds at the end of 2010 may enjoy reasonable returns unless there is a huge increase in inflation, which is subject to a debate in the United States.
Thank you, Mr. Maras. Mr. Boulanger?
It's working now. Very good. Well, as far as equities are concerned, I think what we have seen recently is what I categorize a sucker rally, because we are still in a secular bear market, which started in 2000 and I expect to continue for some time to come. Although sucker rallies are always welcome if you're in the market. I think it's more likely to continue as long as we have quantitative easing, for example, especially in emerged markets like the US. But that aside, I expect emerging markets to continue to do well because economic growth is strong. But I would recommend to have more thematic portfolios in equities. There will always be sectors that do well, and in particular, I think over the next number of years, mining, energy, defense stocks, and technology would do quite well. Fixed interest, as I said, I think at the end of my presentation, I expect that the very long secular bull market in bonds is over and that interest rates will begin their rise. Maybe not rapid rise, but rise nevertheless.
Thank you, Mr. Boulanger. Actually, we cannot lose the opportunity, after taking a look at the general macroeconomy, equity bonds, to take a look at the M&A activity, and in particular because some of you are working in that sector. And we have a very good expert here tonight, which is Mr. Maras. So, Mr. Maras, in your view, as the equity market is still bullish and the M&A activity may be triggered or increased, how do you think this is going to further impact the bad unemployment numbers that we have seen already? Because it seems the economy has been recovering a little bit, but the unemployment still is weak, and obviously if the M&A activity goes ahead, there may be more job cuts. What is your view on that point? There are revealed the micros.
Well, we can take a look at the history of M&A deals, and we know that the M&A deals value in 2010 reached around $2.7 trillion, which is very low, below the record level in 2007, which was almost twice as much. It was 4.7. And looking at the history, it's obvious that M&A M&A activity. In terms of the impact on unemployment or employment levels, it's difficult to judge, but the consolidation itself drives only part of the employment issue, because the other issue is increase in employment due to the sound economic recovery, which is or has been noticed in the States and worldwide. So I would say that more or less the economic growth will offset the potential increase in unemployment due to consolidations within the industries.
Thank you, Mr. Mares. Obviously now one of our preferred topics, and one of the topics we have touched more tonight, which is commodities, basically. And obviously we couldn't avoid a question about the rising marathon of the commodities prices, if this is not going to stop, or if this is going to stop when, and basically, do you link that to fundamentals or to speculative movements on excess of liquidity? So in that sense, I would like to have maybe the opinion of Mr. Crespo to start with.
Thanks, Alicia. To start with, commodities are the worst investment in history. So take care. If you are lucky enough to be in when the bull market starts, happy you. Otherwise, be very careful. I think it is a problem of too much money looking for too few assets. And I'm not sure, but I tend to think, yes, we are in the second leg of a bull market in the commodities prices, very similar to what happened in the 70s, first between 72 and 74, and then between 79 and 82, 81. So it will end in tears, and I think that's all from my side.
Mr. Boulanger, thanks, Mr. Crespo. Very, very straight to the point. Definitely and very clear. Thanks for the message. Sorry about the micros.
You wanted different opinions, you will get a different opinion. I actually believe that the fundamentals are very good for commodities. If you look at demand, supply imbalances in just about every agricultural or energy commodity, there has been very few new mines open over the last 10, 20 years. And the inventory levels of a number of agricultural commodities are very low. So yes, there are some, there is an influence due to too much liquidity and too much money chasing too few investment opportunities, but that would not bring necessarily sustained price increases. I expect price increases to continue based on fundamentals. However, having said that, 2008 was really quite a different year in terms of the behavior of commodity prices relative to equity prices and bond prices. At commodity prices, what I like in particular about commodities as an asset class in a portfolio is that they are negatively correlated historically with equities and bonds, and that's good for a portfolio. But 2008 proved that wrong. Commodities dropped more than equities, and that causes me to think again about whether the negative correlation will persist in the future. But I'm bullish on commodities. And about speculation, I would say that the futures markets of commodities are infinitely smaller volume than credit derivatives, and the long-term exposure to commodities would be achieved from just as much buying as selling in futures contracts, so that pretty much negates the speculation.
Okay, thank you, Mr. Boulanger. I guess the beauty is in diversity. diversity of opinions, right? That's why we are all here. Now going to the currency markets. This is $1 million question, 3 questions in one, and that needs to be answered in 2 minutes by Mr. Diva and 1 minute by Mr. Boulanger. So obviously this is a challenge, but obviously in those current volatile markets, so Mr. Diva, how do you see, first question, in particular the euro and dollar evolution? Second question, do you see any particular winner or loser in the currency landscape? And third question, is the euro at risk?
2 minutes. Okay. As you all know, there are still 5 external imbalances in the world economy. I don't have to repeat which ones. OECD thinks that these imbalances are not widening. Not disappearing, still they're not widening. There are structural reasons behind that. So unless structures in the economies change, we won't see them disappearing yet. The currencies, the changes in currencies might help, of course. So there apparently has to be some weakening of the US dollar still. On the other hand, one would like to see some appreciation of renminbi or yuan. Of course, there has been in the past some appreciation, but this graduality we have seen is not fast enough. But again, I think we can't expect fast changes because there are also structural problems in China. Why they want to stick to more or less fixed exchange rate to US dollar. Within Europe, we also have wide external imbalances, but there has to be only real devaluation, if you want to call that, because there is impossibility to devalue inside of Europe. If you ask me if Euro will survive, it's my own comment, not OECD, because OECD is think tank, in quotation commas. It's owned by the government, so OECD has to take it into account. Though the Secretary General has maybe given, some analysis, he has a kind of optimism in his portfolio, so he has to be very careful how to put certain things. So, like ministers, we also have to be very careful how to say things. So he has to say, okay, you have problems, but you are on the right track to solve these problems. So Euro is my own comment. It will survive unless the German taxpayer says no more. So this is as far as Euro is concerned. I would still bet on Swedish crown, but there is another crown which seems to be winning on the winning side, thanks to, say, governors, former and board members, and Karen, and this is Czech crown. So I keep my money in Czech crown. I'm losing because I have to convert it from euro to Czech crown.
Thank you, Mr. Diva. And I guess I'm not sure if there is any German in the room, but definitely a very relevant comment. Mr. Boulanger, any last word on that one?
Yes, Alicia, for 1 minute. I really have no idea. Between the euro and the US dollar, which currency will be the strongest? Both have strengths and weaknesses. I've been impressed by the resolve to maintain the value of the euro over the last year or so, and signs are there for me to believe that that will continue. So it may not be the same states in the eurozone
Obviously, there's another topic that has been very briefly discussed, which is the future of emerging markets and the outlook of emerging markets economies. In that sense, I would really like to hear the opinion of Mr. Crespo and Mr. Diva around basically the overheating of some emerging markets, like in Brazil with raising inflation, interest rates, and the risk of an abrupt end of the bubble on some of those economies, as well as South Asian economies. In that sense, Mr. Crespo, what is your view on emerging markets, and how do you think those factors are going to impact those economies going forward?
As everybody knows, emerging markets economies are overheated now. If you look, I recommend you to look the Bovespa index. It is a leading indicator of what's going on there and what will be happening to the US indexes in the very near future. But anyway, the miracle of this financial crisis was the decoupling of emerging markets as against developed economies. What is the clue of that decoupling? The massive injection of money done by China in November 2008. So emerging markets will perform as far as the Chinese economy is being stimulated. And if it is not, they will not. Thanks.
Thank you, Mr. Crespo. Mr. Diva?
Yes, as you all know, probably the OECD does very solid facts-based analysis. So OECD also accepts that there is overheating in the emerging economies, China, India, especially India, also Russia, Brazil, and they have already started some restrictive measures. Obviously, monetary policy is a problem for them. When they increase rates, there is an inflow of capital, and it fuels inflation again. So some advice, especially to Brazil, is to use fiscal policy to cool down the economy. What is interesting, if there will be cooling down in the emerging economies, it will obviously through trade affect also growth prospects in mature economies. This is one of the problems which we may encounter in the future.
Thank you, Mr. Diva. Now, I think we have taken a look at the overall markets, the overall asset classes as a whole, with the valuable opinion of our panelists, of course. And now, I think everyone should get a pen, because this is a forecast question, and this is a forecast event. So the members of the panel are going to give us their recommendation for the ideal portfolio for the next year or so. So take your pens, and basically I would start with Mr. Mares for sure, and I would ask him in particular, based on the review done, what portfolio would you propose to the audience today for the next year, basically, to win money?
Well, I have 2 points to answer this question. First, as most of the CFA charter holders might anticipate, I'm not going to give any recommendation that would not be based on credible data. I can give a lot of recommendations that will be based on incredible data, but that will be against the standards of professional conduct that CFA publishes. The advertisement here, you can read it all at the CFA Institute's website. And given the recent development, I think the markets are getting back to normal. The bonds are becoming less risky investments, and equities remain at the risky side of the portfolio. And having said that, I wouldn't give a recommendation anyway without considering risk-reward preferences of the investor, because there are investors who will go for any kind of equity just to make return. With the knowledge that I would recommend, be careful, because you So my portfolio question is not answered because it would really depend on my specific relationship with my specific client. Thank you for understanding.
Thank you, Mr. Mares. Mr. Boulanger, do you want to risk a recommendation?
Well, I am a CFA shareholder as well. Well, but this is an interesting question, and I will proffer an opinion because effectively my advice would be not to invest. Therefore, not giving you any investment advice. I would be saying you should buy bullion, gold and silver.
That was short and brief. Thank you very much. Fortunately, we have no CFA charter holders in the panel tonight. So, Mr. Diva, if you need to invest next year, where would you invest?
I've been following your orders tonight, and with all due respect, I will tell you sort of Chinese proverbs instead of portfolio. There is a Chinese proverb which I like, and I think it's appropriate to tell it tonight here. This proverb says, everybody who foretells the future is a liar, even if he tells the truth.
Thank you, Mr. Diva, and I guess we can close the question with Mr. Crespo's opinion on that one, that I think he has an opinion.
I will start reading a disclaimer. After listening to my colleagues, I'm going to say what I would do, not what I recommend. So this is not a recommendation to buy, etc., etc. This is what I would do for my own portfolio if I had one. And first of all, I think the Dow Jones Industrials is going to peak within 2011. The same, of course, for the Standard & Poor's 500. So I would overweight equities until the Dow Jones Industrials is between 13,000 and 14,000. I think 13,000 is the beginning of the countdown for a new big drop of the stock exchanges. And then I would avoid the long-term bonds for the time being too. I would bet on commodities, but just for the sake of doing something with commodities. And finally, I would bet on the dollar. I think the dollar is on a secular downtrend, but the next few years we will see a dollar very strong, even if as a currency it is in a secular downtrend. And as we are almost closing this forecasting section, I have a motto for you. I even dare suggest the organizers to use this motto for coming years. If you cannot get a crystal ball, buy a history book.
Thank you, Mr. Crespo. Actually, thanks to all. It's very interesting to see, because I was recently moderating a panel in Switzerland with the chief investment officers of the major banks, UBS, Credit Suisse, Pictet, and actually around the portfolio question, there were so diverse opinions that the panel finished basically in a battle around investment opinions, and it was very exciting because obviously no one really thought like the other person, which is what makes obviously the enrichment of those panels. So I think we did a very good tour around, in the time we were provided, around the economy outlook and a little bit about investment decisions regarding the different asset classes. I would like, however, try to summarize this session with some conclusions. I think one point that has been made here and that many economists are pointing out today is the instability of the economic recovery. There are some solid indicators out there like unemployment rates and others that do not seem to recover. And when we look at the economy that is growing on the market side but is not growing on the real side, there is a question around if this recovery is sustainable. That is the first point. Second point is with what Louis Boulanger mentioned on his presentation around aggressive monetary policy of those governments and the excess of liquidity. We see that this is creating a few bubbles in the markets again, and we may have some surprises in the future around where those bubbles are going to break, when and how. A third point definitely is around, again, this monetary policy and the effectiveness of this monetary policy in a situation of a fragile economy. How far we can go with monetary easing, impacting really the solid concepts of the economy. And finally, around geopolitics, which I think was a topic also mentioned by some of our panelists, it seems that there are some important geopolitical changes going on. In particular, we're seeing some changes on the Middle East and on Africa. Some economists are talking about emerging markets changing, some others about emerged market changes and some influence on the developed countries on those events that are happening. I just leave the question there. I'm sure Le Monde and some French newspapers do have more information on that. With that, I would like to really thank the panel tonight. I think we had a pleasure and an honor to have the opinions of such a distinguished set of individuals with such a long career and specialization on their fields. And we would like to open now the floor to a Q&A session that may need to be brief, although we're not doing bad in time, so we may have 10 minutes for you guys to discuss with any member of the panel. Thanks very much for your attention. Petra, I think you had a question. Go ahead.
The question about the pension reform in the Czech Republic. The result of the survey presented by Mr. Hertzman from Faktum Radio tonight showed that most respondents, including the Czech MPs, who are the ultimate decision makers about the Czech pension reform, think that contributions to the private pension funds should not be made mandatory. This implies that the Czech government should bear the primary responsibility for pensions and the living standard of people who retire. What's your view about this, given first the problem of aging population in the Czech Republic, and second the substantial deficit the public pension system creates every year? And is there any lesson to be learned from the pension system in New Zealand?
Thank you for your question. I guess it falls on me because I'm an actuary to talk about pension reform. Very complex subject, and it's a problem everywhere around the world, the aging population, perhaps except for Muslim countries, it seems, have a very high percentage of young people. I think we will see more and more states passing the buck to people to prepare for maybe favorable tax treatment or partially favorable tax treatment. But it's happening everywhere, and I think we will use less and less the word pension because pension implies that you don't have the risk. Whoever's providing the pension has the risk. We have seen a great transition from defined benefit to defined contribution, or from pension benefits to accumulated savings provided benefit. So I think we'll see an ongoing that. In terms of compulsion, New Zealand found a very neat way of addressing compulsion with what they call Kiwi Saver, state-sponsored too that the whole pension concept, pension system began, I think in Bismarck, Germany, where the benefit was payable at age 65 when the life expectancy was 60. And now we have pensions payable at about the same age, and we live till we're 90 or something. So if we continue with the pension, we'll need serious reform in terms of benefit, entitlement, age.
Thank you, Mr. Boulanger. Any other question on the floor? No, I guess everyone is tired at this time of the night. And we're going to have now the possibility to network and maybe have a chat around a glass of wine. So again, thanks very much for your attention. Thanks to the CFA and thanks to the panelists. I guess our panel is concluded.